very much. Well, it is a big week for
yet.
investors as well. They are waiting to see whether the Fed is going to signal whether it will raise rates. Let's get to Market Watch's Jonathan Hoenig and Michelle Schneider. Good to see you both. If you look down at the bottom right of your screen, of course, you guys can't, but the viewers can. We saw a potential increase in value of the markets in pre-market activity today. Right now, it's down 219. That might be, Jonathan, because the New York Fed said inflation expectations continue to rise. Are you expecting them to rise as well?
Well, we're seeing it, David, and we're seeing inflation, and it is 100% caused by government. What is inflation? And it's an expansion of the money supply to support deficit spending. Oh, we've seen a little bit of that lately. In fact, 20% of all dollars in circulation were printed in the last year, and that's why, Jeff reported on higher gas prices. But, David, we're seeing higher prices for everything: corn, wheat, soybeans, lumber. And, people might say, oh, just a little bit of inflation. Let's not forget President Ford called inflation public enemy number one. It wasn't global warming. It wasn't even crime. It was inflation. That's my fear. We could be heading in that direction once again. And it's government spending that's doing it.
Well, and Michelle, what happens is that the Fed buys up a lot of this debt to the tune of $120 billion every month. That's about $1.5 trillion a year, and money is then printed by the Treasury in order to purchase that debt. That's what happens. The question is whether the Fed is going to begin to trim back on that. And do you think that they may buy less debt, meaning interest rates might go up a little bit?
Well, perhaps at some point, but just to jump on what was just said, I'm totally in the same camp of fear of inflation continuing. I think we're just starting a super cycle, commodity super cycle going up. But it's more than just government spending and Fed accommodative stance. That, of course, has contributed. But there's also been results from the pandemic, and even before the pandemic, but with the pandemic, about the supply chain disruptions and the low labor force, and just in terms of the whole commodities market, since they're raw materials, a lot of farmers and miners, they have really cut back on their production ahead of the pandemic because prices were so low, they were looking at it as a hedge. Now we have the fact that's coming home to roost in that we don't have enough supply. So there's just a good old economics 101 supply-demand. More demand, lower supply, inflation. Simple.
And Jonathan, one of the problems with supply is that you don't have as many workers. There are 9.4 million unfilled jobs, I think largely because of the fact we're paying people to stay at home, and that means less stuff being produced. There are two parts of inflation: too much money chasing too few goods. When you have 9.4 million unfilled jobs, that means a lot less workers producing a lot less things, meaning prices go up, right?
Oh, yeah. David, once again, this is caused by government. Everything from what you alluded to, what you've talked about, you're paying workers to stay home, to even things like, for example, higher wages, higher minimum wages, which push inflation up across the board. And what's so insidious, David, is that this is a tax on the poor. Inflation is a tax on the poor, whether it's higher interest rates, whether it's higher costs for a cup of coffee or a bag of groceries. It's the poor, those in Washington who they claim to want to help the most. It's the poor that are hurt the most by this inflation.
They always get stuck with the fuzzy end of the stick, as we say. We're going to see more of you folks coming up. Thank you very much. And we also have a story about, thousands of Goldman Sachs and Credit Suisse employees are returning to the office today, but it's coming at a time when more Americans are quitting their jobs than they have over the past 2 decades. Let's bring back Jonathan Hoenig and Michelle Schneider. Jamie Dimon just recently said that he thinks work should be for those who hustle at their work. I'm wondering, Michelle, how we get our hustle back. It looks like over the past year of staying at home, and particularly now that we're paying people more for staying at home than we used to, we have lost a little bit of the hustle in our work lives. How do we get it back?
Well, that's a very interesting question, because some of this happened even long before pandemic. The work at home phase, because of technology making it so easy to do so, is not brand new. COVID just gave it a real shot in the arm. So now here we are, people have gotten used to it. So it's going to be difficult, I think, to get people back to work. There will be a percentage of people who just refuse to do so. Apple, for example, just went through their employees wanting them to come back to the office in September 3 days a week, and they're giving them some gruff about it. So it'll be what can they do? Well, obviously one thing will be people feeling totally like they're just bored at home. Hopefully that sort of happens and people say, you know what, I really need to be around people and I'm going to get out. Others will continue to be some of this incentive, and whether it be higher wages or bonuses or promotions or some kind of equity share, it's going to have to be somewhat creative. Otherwise, the businesses, unfortunately for some of them, will have to adapt or die. And that's just the reality of the situation with technology so advanced.
Jonathan, it just seems so contrary to the American tradition of working your butt off in order to get somewhere, particularly in a place like New York or Chicago where you are, or LA, where people are known for working long hours, working very hard in order to get ahead. We don't want to be like Europeans who have this kind of much more mild way of thinking about work.
Yeah, I mean, well, there's a lot going on here, David. And Michelle is absolutely right. I mean, the nature of work is going to change. You're probably not going to see those big office spaces with thousands of desks, the technology, et cetera. But, David, what you're alluding to is a little bit more of the nature of the entitlement state. And absolutely, the bigger the entitlement state grows, the lower that innovation, the lower that drive becomes. But I do think the fact that so many people are quitting their jobs, especially these six-figure jobs, honestly, David, for me, it might be sign of a top. I mean, I remember in 1999, everyone was leaving those very high-paying jobs to go to a startup to take some time off. Then I remember just a few years later, people with MBAs were trying to find jobs at Starbucks. So these are really good times if people are quitting six-figure jobs.
You actually mentioned the key word there, entitlement. It's that entitlement attitude that has got to change. And frankly, I don't think it's going to change anytime soon with what we're thinking of spending money on in terms of the government. Michelle, let me switch gears dramatically to Bitcoin, because it surged well over 40,000 today. It's now up 8%. By the way, it's happening when gold is down. So there does seem to be this inflation hedge in cryptos. What do you think of that?
I think that's an astute observation. Gold did come off its lows to rally a little bit here, but Bitcoin started to steal the thunder. But a lot of it, again, had to do with Elon Musk and his incredible influence over the crypto market, because he came out and said if they can prove that the mining is going to be greener, at least 50% better, then he will start allowing people to buy Teslas with Bitcoin again. The fact that he has such an influence is troubling to some and encouraging to those, particularly the bulls. But just getting back, I want to mention something about gold, because what's really interesting about gold is not just its relationship to Bitcoin, but its relationship to silver. And there is a ratio between silver and gold that we commodity traders have followed for years and years. And when silver starts to outperform gold, that too is an inflationary indicator. So something to keep an eye on.
Very quickly, Jonathan, what do you think about gold?
David, gold is a wonderful store of inflation. It is a currency, exactly what Bitcoin is not. What type of a store of wealth is Bitcoin if it vacillates by 30, 40, 50%? So if you're looking for a long-term hold, I would certainly hold gold over Bitcoin. To me, Bitcoin is in 2021 what nanotechnology was in 2005. You might not remember that, but that was the hottest investment trend back in 2005. No one even mentions it now. That's my bold prediction for Bitcoin.
You were being so kind. I do remember it, though. I have to admit I'm at least that old. Jonathan, Michelle, great to see you both. Thank you very much. And coming up, Wall Street going